Hey, Kevin here, top wanted financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. Today, I want to compare, kind of do a versus episode of FedEx versus UPS. It was one of the questions that you guys asked, I want to say last week. And anytime y'all ask great questions, I love to come up with great videos. So make sure that you have a question, put it in the comments below. I will add it to the list and we will tackle it. So make sure you add those questions in the comments below, and make sure you share this video as well. Now, before I jump into that, I do want to talk about just the market in general today. It was a strange day. It started off where the market was down pretty bad. Things weren't looking great. People at one point had blamed the stimulus checks, like, oh, people hit the stimulus checks, they're cashing out, they're doing all this stuff. And then by the end of the day, the market was up. So, hey, that stuff happens. Again, you guys know I'm in a trade for Moderna. I got up this morning, checked on it, already got my stop loss and stuff in, so I'm already good. In fact, I think my exit point, worst case scenario, was for me to exit the trade, and I think it was 115 or so, which would have been a $20 loss per share at worst. I got in at 135. So I said, look, I'm gonna cut my loss at 115 if that's what happens. Things were good yesterday where I was up. I think it was up 20 to $25 a share, 155. So I actually moved my stop loss up to about 140 now. So worst case scenario, I'm gonna walk out of here with at least a $5 around $5 profit per share. That ain't bad. But it dipped down a bit and then it came right back up. And it's in the 145, 146 area somewhere. At one point, it didn't look all that great earlier this morning. So that was across the board. I checked my portfolio on public, and it just says your portfolio is down. I didn't jump into it and see which stocks were down and why, because I don't need that type of negative energy, and I don't want to stare at my account every day. And then I get on there and make a post, and then it's green. I'm like, oh well, and just keep going about my business. So regardless of what the market does, I'm staying put until June, and that's when we'll start to make some more decisions. All right, so aside from that, let's go ahead and jump into it. Difference between FedEx and UPS. Now, a lot of times in these episodes, people will ask me, well, why don't you just do both, right? Why don't you just take your money, split it in half, and own both of them? That way you can't lose. In some cases, you're right, where you don't lose at all because both are doing well. And in other cases, sometimes you can lose in that one does really well and one does not. And you either choose the wrong one, which you are taking on a risk by doing that, or you gain in both situations. But the difference between the two really cuts your return in half. So you're cutting down your risk, but you can also cut down your returns. So I can understand both cases. Sometimes when you come into a business like this, they're kind of identical, right? Like I really can't think of anything that FedEx does that UPS doesn't do, other than the fact that you can argue that one is better than the other, or one makes a better product than the other. But they do the same things. It's almost like Square and PayPal, or even Pepsi and Coca-Cola. But there are some differences between Pepsi and Coca-Cola, which we talked about this time last year. I'm actually going to show you a chart between the each of these six companies, and why I can be very confident in saying this one is better than the other, and in other cases why I'm not so much. For example, between Coca-Cola and Pepsi, the difference is Pepsi owns Frito-Lay and a bunch of their snack stuff, right? They've got a fallback if drinks don't work. Coca-Cola, not so much. So that is they're in the same business, they do the same things, but one of them has an extra level, an extra gear to go to that the other doesn't. Square and PayPal are almost in the exact same space. You got the Square kiosk stuff for businesses. You got Cash App to take and send payments. You can invest on there. That may be the one difference, the investment piece. And then you got PayPal. Well, you can buy and send stuff on PayPal. They're going to add Bitcoin. I haven't seen it yet. I mean, they pretty much do the exact same thing. It's just two versions of it. However, in all these cases, Coca-Cola and Pepsi, and then Square and PayPal, they both perform well, but there is a big difference. I'm going to show you that here, and then we'll jump into why I'm prefacing that for these two. All right, so here you've got PayPal. The reason why it was a difficult decision for me, we did that video. I ended up going with Square. I think my son owns PayPal. But you see here, just the past year, Square was up nearly 500% over the past year, which, man, I wish I had found out about this a year ago, right? Or at this time last year. I didn't get onto it until maybe June or so. But Square up 500%, and PayPal still very good, but up 170 odd percent, 71%. So if I had gotten both, without doing exact math, I'd probably be somewhere in this 300 to 350 range, just kind of taking the middle, which neither one of these are bad cases, right? However, for the long term, why I said Square was the better choice. I mean, look at this. Over 5 years, you look at 1,000%, 1921, which is ridiculous, versus 538%. Again, yes, 500% is very good, right? You make 500%, you're not going to get any sympathy from me. But again, if you chose PayPal and you put your money there and you look up and, oh my God, what did I do? I missed out on Square. Even though you made money, psychologically, you're going to feel some type of way, right? Even if you, again, cut this in half and you got somewhere between 1,000 to 1,250 range, great, right? Still an amazing return, but it's always that cost benefit analysis. Whereas if I had chosen more correctly, they're both right in this case. If you had chosen more correctly, you would have had, an even better return. So that's always a cost as to why sometimes I don't say that, you should just get both. In this case, Square is a clear option for me, right? There is no debating here. In this case, right now, it's Square. We'll see what it does in the future, because this only tells us what happened in the past. So if we come back here and move on to Coca-Cola. Over the past year, I mean, they're neck and neck, right? 33% versus 29%. 29% is Pepsi, 33 is Coca-Cola. Whatever, right? I mean, that's a small margin that can be made up pretty quickly. You can see here, you can see how they keep trading spots, right? It all depending on the day, right? Depending on the day, it can be a bit different. Now, if we zoom out a bit, we do 2 years. Again, that's a 2% difference, 2.7%, barely 3% difference. If I go back 5 years, now we're starting to see that gap between the two, where Coca-Cola is up 32% versus Pepsi is up 32% versus 12% for Coca-Cola. So that's a 20% difference between the two if I'm choosing the right one. So there is a value for some to say I'm choosing one over the other. Now, before we go into Fedex, I want to tell you a few facts. So I check a lot of stuff. So I check financial information. I check the news to prepare myself to see which direction I want to go. I check the charts that I just showed you guys. Those are my primary things. And I also check and see where big money is. I want to see what are the billionaire funds doing? What are the $1 billion investors doing? Just to see where's their headspace, where's their money. Let me see if that makes sense, if I agree or if I disagree. Because there are times, I've talked about this before, where Warren Buffett would do something like, nah, that ain't what I'm doing with my money, right? And the other times where somebody will do something, makes sense. I think I'm also going to hop on that because you got more money at risk and your investment's going to move the market more than mine, right? So I'm going to give you a few stats and facts about the two and give you where I stand on it. So they were really even. Analysts that I looked at, they were about neck and neck. Now, FedEx got a better rating. And this is on public. There are a bunch of different ratings out there. It was just the easiest one for me to get to. So they rate FedEx at a higher buy, the analysts that they have on public. They say a 1.7. I believe 1 is the highest all the way to the left. So in this case, they're at 1.7, so pretty close to that 1. They get UPS at 2.3. Both are buys. They say, from the analyst perspective, you can weigh that however you want to weigh it. They say both are good buys. Warren Buffett has $10 million in UPS. Let me double check that. Yes, Warren Buffett owns 10 million UPS. That's not a lot. His total holdings inside of this particular fund is $270 billion. This is not even 1% of those holdings. In fact, if you took all of his investments and rate them from having the most money, which is Apple at 47% or 43% or so, all the way down to UPS, it doesn't even register. They say 0.00. I'm like, how? That's because the fraction of that 10 million is so tiny. So he owns it, but it ain't a whole lot of faith there. But he does own it, right? 10 million is more than I'll ever have in this stock. So just interesting tidbit. He owns it, but he don't have much faith in it to have it at less than 0.001. So take it or leave it, right? Just interesting tidbit. Put the feather in your cap. See what you want to do with it. Also, the Bill and Melinda Gates Foundation, they have about $22 billion invested, and they have to disclose what they're investing in. They hold both both at about 3.5% each. So you got FedEx and they got UPS. So that makes me, look at it and say it might make sense to own both. And based on what I saw, they do the exact same thing, and they're really the same. They're really the same. I don't think you can lose it either way. However, there is one caveat. There was one caveat that I found that may make you change your mind or at least feel differently, but you have to see how valuable that caveat is. So I'm gonna pull up this chart here and show you FedEx and UPS over the past year. So this is the S&P 500 at the bottom at 66%, just to give you context. So I'm gonna take that out real quick. Last year, so a year ago from now, right? FedEx was up 193% over that time, where UPS was only, put in air quotes, only up 87%. Both better than the market, but if I can get a near 200% return, I'm gonna take it, right? Versus 87%, which is still good, but you're missing out, or you're reducing your risk, which is good, but you need to know that in advance. You're reducing that risk and getting somewhere around 150, 125. Both are great. Hard to lose between the two. But here's the thing why I say, well, you're flipping a coin at this point. Here's why. Last year was somewhat of an anomaly in that you saw a surge of B2C movement where FedEx are shipping to consumers at a much higher rate than what they would have in the past, right? So they're getting a lot more revenue than what they would have otherwise. So if I go here to 2 years, they are very close. They're almost identical. They're almost identical at like 49% gain over the past 2 years. I go to 5 years. They're almost the same. In this case, FedEx is up, 7%, if that? And again, that can change by tomorrow. It can change in a week. We don't, it's hard to tell when that small of a margin is going to change. So for me, if this was last year, FedEx would have been the one. But to me, and you can see it here, it looks like it ain't gonna matter moving forward. So yes, FedEx is up now. Both are pretty flat, so I'm not sure if it's something I would jump in now. It's hard to tell. Like you can see here, starting in, actually I'll just do this year to date, 2%, great for FedEx. And this is a negative 3.5. So pretty flat. If I go back to this one, I think this gives us a better view. You can see that, what is this? UPS at the bottom. I mean, it's, didn't mean to do that. Sorry. Here we go. Sorry, y'all. UPS at the bottom is really flat. It hadn't really done much since October. And in fact, since about December or so, FedEx has kind of fallen off and kind of been flat from here on out. So we'll see. If you already have it, or I'll say this, if I already had either of these, especially if I had FedEx, I'm probably going to hold. There are no red flags. Again, both of them are making good money. They're going to be around. They're not going out of business. They may not make as much as what they did last year, which that's going to be the case for a lot of companies. It's a whole lot of companies, Zoom included. You can throw Square in there if you want to. Most companies, Amazon even, there are a lot of companies that are probably not going to see the same amount of money they made in 2020 in 2021, just because we hope things are better. We hope people go back outside. We hope things return to normal and we can kind of spend money in a normal way. And some of the stocks that didn't do well might return. So you want to have that in mind as well. So this one, I really don't like to do coin flips. I would prefer to be a lot more decisive. If you had to force me to pick, I guess I'm gonna force and go to FedEx. FedEx by a hair, not by a whole bunch. If you chose UPS, I don't think you made a bad decision. If you made FedEx, I don't think you made a bad decision, right? If you are going to consider them, I'd probably just do both. In this particular case, maybe not for Square and PayPal, maybe not for a Coca-Cola and Pepsi, even though those are clones, you could say, of the same business. So that's how I view these two. I kind of, it makes me want to throw out 2020 because that was a 1 year, it looked like, where the difference was huge, whereas 2 years, 5 years, I mean, they were almost neck and neck. One other thing you may want to know, UPS, I want to say FedEx, UPS did get a new CEO, and she is focused on clearly improving the business like all people are. Another thing that kind of separates the two is FedEx is really, really good on weekend deliveries, where UPS is a clear understudy, I guess, or trying to catch up there. So that's one of the differences. I think FedEx is a bit more profitable. They bring in more profit per their cost and everything else versus UPS. So those are the tiny, tiny things I would lean towards UPS, but I'm not overly confident in either one in terms of like which one is definitely better. Both are good in this case. I don't think you can't lose. You're probably not going to lose rather in either one of them. So this is the one time so far, one of the few times I'll say, one of the few times where I might just get both, or you know, I'm a lean towards FedEx. One other thing, again, I want to emphasize this. Right now, I am not 100% sure that either are going to be like a breakout for 2021. That doesn't mean that it's a bad investment, though. Okay, so like in my mind, you've got something like, you know, a square that was up, you know, 1,000 some odd percent, something ridiculous, and then you got stuff that's like, oh, it did good, it did really good compared to the market. It just wasn't a rocket ship, which every investment doesn't have to be. So if you own it already, perfect. But if I'm looking for something to jump a bit more, if I'm looking for something to be a little more aggressive, then I might look somewhere else. I don't think at the end of the year we're going to look back and say, man, FedEx or UPS, that was the hottest stock of the year. I don't think they're in that type of business, and I don't think the world is shifting that way. Whereas if I had known the virus was going to hit last year, I would have felt a lot differently. Perhaps we can cover some of the ones that we think are going to be the hottest for 2021. I've got a few more ideas now in March that we did not have back in January or December. All right, so that's it for me. Let me know what you think about the video. Let me know if you want a different type of versus episode. Which way are you leaning? Is there something that I missed? Because we all look at different things, and a lot of y'all are really smart. Y'all say, hey, look, I'm choosing this one because they did X, Y, and Z, which is brilliant, right? So let me know in the comments, what did you like? What did you miss? Is there something that you feel differently about the two? And then what other stocks or what other things out there that you want me to cover in a video? All right, that's it for me. I'll talk to you guys later.